What's up everybody? Welcome to the Stocks channel. Today we see the market continuing to make brand new all-time highs, and things can really start to get interesting from here. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today's SPY was up 0.21%, and we did hit that brand new all-time high on Friday last week, and today we did get follow through with yet another brand new all-time high, and you're now starting to see the headlines coming out that we are in a bull market. Well, obviously we already knew that, and this was the highest probability chance because we had the bull trend. So now that we're at brand new all-time highs, I'm going to delete the previous all-time high because that was really just a marker for us to see when we were breaking through that level. And I told you on Thursday we would likely hit 482, and then above 482 we have 485, just below 487, and then right below 490. And if we can clear all of these resistances, we're likely going to see some type of blow off top event all the way into the 500s. Now, if you don't know what a blow off top event is, it's essentially an irrational parabolic rally because we are breaking out to all-time highs. You have to remember that all-time highs means that we are at prices that have never been seen before. So if you really think about that, that means we are in a market that now has no resistance. Now, obviously, there are still resistance levels and there are still places people will lock profits, which will cause price to stall. But you have to remember there's no structure at an all-time high that tells us we can't continue to go higher. And we do still have a lot of short volume and a lot of short sellers who are now taking on quote unquote infinite risk, because we don't truly know how high the market's going to go. So if you stay short, you are taking on infinite risk if the market were to go up another 1000%. Now, obviously, that's not what is likely going to happen, but it has happened in the past. And it could happen again where we could get a type of very parabolic blow off top rally. So for that reason, I'm going to give you one very simple rule in the market. You should not be shorting SPY while it's trading above 478. 478 is the breakout from the closing all-time highs. So now that we're above that level, there's no reason to be short the market because we're in a market that has very little resistance and is likely going to continue to go higher. Now, contrary to what I just said, there will be people out there telling you that now that SPY is at all-time highs, it's going to crash and it's going to go through a major correction and now's the time to sell and get out. Just ignore those people. As I've said many times, we don't give any care what people think about the market. We follow our chart. Our chart tells us to stay long and stay bullish, and this bull trend is only strengthening. As you can see, the separation in the moving averages as this trend is really starting to build up and pick up momentum. So again, there is nothing bearish about hitting an all-time high. It is the exact opposite. It's extremely bullish. And now all of the doubters who have denied the fact that we are in a bull market cannot deny it any longer because now it's 100% objective because we just broke out to a brand new, never before seen high in the market. There's no way that can be a bear market, and there's no way that can be bearish. So it's very important you hammer down your trade plan, and remember this is a strong bull trend until it's not, and the until it's not is going to be the breakdown below 478. Now, if you want to use a higher risk level, you can always use the 5 EMA because that is telling you what's going on in the last 5 days. But the risk level I suggest to stay long on this market will be while we're above 478. If you want to short the market, that is very risky, and that's at your own risk because there's nothing at an all-time high that says you should be shorting. While that doesn't guarantee we won't go lower, there's just nothing on the chart that tells us it's time to short. So we can delete the arrow because we've hit all of the price targets, and what could be happening from here, and we are outside the upper Bollinger Band, is we could just get a little bit of a cool down, which could mean we come all the way back down to 478, and then we just continue higher and make brand new all-time highs. We're in the month of January, and there's no reason to believe this momentum is going to die out before the end of the month, and the end of the month is going to take us out quite a few more trading days, which could easily push us into that level right around 490. So again, I'm not predicting this pullback has to happen. I'm just simply telling you that little bit of pullback for that much upside is not worth a short trade. And it's possible we don't even get a pullback and we just continue this rally straight towards that target now, and we don't get a pullback until sometime later in February or March. So just be very disciplined in your trade plan. These are all of the critical levels I think you should be paying attention to. And again, I suggest staying long on the market as long as we're above 478, especially if we get a blow off top rally. Because if you're long during the blow off top rally, you are going to get very quick profits. And if you're trying to short it, you're just going to cause too much unnecessary damage to your account. So know these critical levels that I just talked about and understand we are staying long and we are expecting the bull trend to continue above 478, and you should do just fine. On the NASDAQ 100 triple Qs, we were up 0.13% today, which is another brand new all-time high, and we blasted right through all of the price targets that I told you we would likely hit on Thursday, which was the breakthrough 414 and the push into the 420s. So we've now hit those price targets, and just like I said on SPY, there's no reason to believe at brand new all-time highs that we need to go anywhere except continue this bull trend. Now, we do have plenty of gaps to fill, and those gaps will fill at some point in the future, but we have plenty of gaps still open from Q4 last year. So don't worry about when those gaps will get filled, because right now we have a bull trend that's telling us it's likely going higher. So in the bull trend for the triple Qs, it is going to remain bullish as long as we're above this breakout between 412 and 414. So that is the line in the sand that as long as we're above that level, I think you should be long on the triple Qs. Now, the price targets, we've hit a lot of them. We're in the 420s, and that was 422, right around 425, and then up here just below 429. And if we break through all of these price targets, we are very likely getting in that blow off top scenario, which could push us to a parabolic rally. Now, if we start to pull back, you're looking for support right around 418, 414, and this gap filled just above 413. On the Dow Jones, we were up 0.39% today, and again, another brand new closing all-time high. And I told you in the Dow Jones, we could bounce off of this lower Bollinger Band as long as we are above 370 and still push to a brand new all-time high in the 380s, and so far that is exactly what is playing out. So in the Dow Jones, stay bullish as long as we're above 377, and I'm going to slightly move that line so it's a little cleaner to see. So above 377, we could be pushing higher towards 385, and then above 385, we have a price target right around 391. If we do not break down below 377, then it's going to continue to push higher, and it's really just as simple as that. And this bull trend is just now starting to pick up momentum, which you can see from the moving averages. On the Russell 2000 IWM ETF, we were up 2.14% today, and it looks like the plan was to bounce off of this 50 EMA towards this gap close below 199, and so far it looks like that's exactly what's happening, and we could close that gap as soon as tomorrow. Now, we do need to break back over this 20 daily moving average and start to prove we can build back a bull trend, which is going to happen off of the support at the rising 50 EMA. So the rising 50 EMA is your risk level, which means we're staying bullish in IWM as long as we're above 188 to 189. And on the daily chart, you can actually stay bullish above 186. So it really doesn't matter which risk level you use as long as that you're properly managing your risk from one of these levels, and do understand it's likely that we are pushing higher. Once we fill that gap, if we continue to push through it, then we'll be looking for 203 and 207. On the ARKK ETF, we were up 2.27% today, and we are trying to bounce back above that 50 EMA, which is that resistance right around 47.3. We have a gap to fill at 46.3, so if that gap doesn't fill, it could be a breakaway gap, and that could be a bullish sign that ARKK is trying to push higher and the bottom is in. Now, if the bottom is not in, we need to break down below 45.6 and then likely come back down towards this 200 daily moving average right around 43. If we continue to push higher, we're looking for that strong resistance zone between 50 and 51, and if we clear through that, we're likely going back into a bull trend. On the VIX, we were down about 1% today, and the VIX is still rejecting from that resistance right around 15. And I told you during a bull trend, a bounce in the VIX is completely normal. During a pullback, it's more important that we don't see the VIX spiking above 18 and 20. And so far, we are continuing to see that rejection in the VIX as it's heading back down towards 12. So there's really nothing in the VIX that tells us anything other than what we already know, which is that we are in a bull trend heading higher. On Bitcoin, we're currently down around 4%, and Bitcoin is getting very close to my price target at 38,000. And I told you this was a highly likelihood chance simply because it's a buy the rumor, sell the news event. And ever since the Bitcoin ETFs got approved, I told you there was likely going to be a major sell-off to punish the people chasing it. So this was a theory that was confirmed by price action, so it wasn't just a wild guess with no support. We did get confirmation shortly after I said it with the high volume selling, which we clearly had, and I told you that was a sign to get risk off, and it was a good call this far because we are continuing lower. Now, whether or not we actually get all the way to 38,000 is irrelevant. If you just took caution here, you've already saved yourself from about a 16% drop. So if you want to be a Bitcoin bull and you don't mind buying too early, then you could start to buy here, but do understand this is a downtrend while we're trading below 40,500, and this is where things can really start to get ugly. If we do start to crash, we could go way below my price target, And in that event, I would be looking for support down here right around 33,000. So I'm not going to change anything about my projection. I still think we're going to 38,000, and there's nothing on the chart that tells me I need to change my mind unless we see a bounce back above this high at 43,000. On Nvidia stock, we were up 0.27% today, and I did tell you there was a very good chance Nvidia was trying to get to $600 before earnings, and we are still a ways away from earnings, and we have officially hit $600 as of today's trading. So again, there's really nothing on this chart that tells you it can't go higher, so I'm not putting any limits on where this stock can go. I'm simply telling you it's not a stock worth shorting. For some reason, the bears love to short this stock, even though it is a very incredibly bullish chart, and I simply just don't get it. So I'll just be that voice of reason and remind you one more time, do not bother shorting this stock. Just because it hit 600 doesn't mean it can't go higher, and I have plenty more price targets that we could likely hit. But as long as we're above 590, it's possible we're going to 606 and then 615 and then above that 633. And again, there's always going to be another price target while you're in a bull trend. So block out all of the noise on people telling you it's a bubble, it's overvalued, and it's coming down in a big way. These people have been losing their ass shorting this stock, and they simply want you to lose money with them. This is a very bullish stock and a very bullish chart, and it looks like it wants to continue to go higher. Pay attention to that 5 EMA as well, because this is a strong bull trend, and if it starts to weaken, we will start to close below that 5 EMA. On Tesla stock, we were down 1.6% today, and Tesla continues to test my very critical support I have right here between 207 and 208. And I thought if we were going to hold a support level in Tesla, it would be one of these levels at 207 or 214. So I still think this zone between 207 and 214 could be a buy zone. Now, obviously, with earnings coming up around the corner after the close on Wednesday, anything is possible, which includes a further drop and a further decline, or a very major gap up, and this stock just reverses the downtrend and starts to run. I'm not making any predictions on what happens after earnings. I'm going to let the price do all the talking. And that simply means right now this is a risky trade, even though it is at support, simply because we have earnings in a couple of days. So you decide if it's worth the risk or not. And if we break below 207, it should be a swift drop down towards 197. A bounce from here should easily start taking us to 225 and 231 in a hurry. But again, we need proof there's a bounce, and right now we just don't have one. On Apple stock, we're up 1.22%, and we did hit my price target, which I told you Apple was likely going to at 192, and I told you we only had further confirmation because of the double bottom breakout. So that has all played out, and we've reached the price target, and now that we're getting the double bottom breakout, there's really nothing any longer bearish about the chart, especially while Apple is trading above 186. So even though we hit the price target, that doesn't mean Apple can't continue to go higher, and we do have gaps to fill to the downside, but let's face it, what stock at this point doesn't? So if Apple can break through this resistance right here at 194, we're looking for a push higher back towards 198, and then above 198, we should be breaking out to brand new all-time highs. If we start to pull back, look for support between 188 and 190. So jumping back over to the S&P 500, this is a very exciting bull market, and yes, it is a bull market which no longer can be denied by the bears, and the bears have now been fighting a bull trend for over 12 months. Do not be that bear and do not be that person, because the chart has been bullish for a very long time, and I've been talking about this in all of my daily and weekly technical analysis updates on how we did have very bullish setups. So if you missed the bull rally, just learn from it. There's always going to be times to learn during your trading career, and this is a long journey and not a get rich quick scheme, so you're going to learn a lot as you continue to do this. As I always tell you, my suggestion of what you should learn to do is manage your risk and learn how to follow the chart. And that way you're not depending on anybody else's opinions on what they think the market's going to do. You're going to know how to open up your chart and understand how to read your chart and understand how to set up profitable trades from your chart. This is how you become a disciplined and profitable trader, and there's really no easy way to do it. You need to learn how to read a chart, and you need to start trading and start small. Manage your risk as I've taught you to do, and that way you don't blow up your account, and just continue to get better and better. So I still think this is going to be a great trading year, and I still think we are going to have one of our best trading years yet. So if you want to come crush the market with us, you can come join us over at Bank Trade Alerts. You get all of your buy and sell alerts directly via email and text message, and we only trade 2 ETFs, which is the TQQQ and the SQQQ. It's very simple to follow, and you will crush the market this year. You can find out how to join Bank by clicking on the links below. If you want access to all of my intraday updates and technical analysis, then you need to be in the Stocks Channel Discord server, and you can find out how to join that below as well. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.